Tesla just stopped making two of its most famous cars, not because they failed, because Elon Musk is building something worth $10 trillion, and he needs the factory space. Tesla ended production of the Model S and Model X, two of the most iconic electric vehicles ever built, gone from the assembly line, not recalled, not discontinued for poor sales, deliberately stopped, gutting the assembly lines of the world's most advanced EVs to make room for something far more disruptive: humanoid automation at full scale. Specifically, for a humanoid robot, Elon Musk calls the most important product ever made by anyone in history, a product he says will generate more revenue than every Tesla car ever sold combined. A product he says could be worth $10 trillion. That's right, $10 trillion. The entire U.S. economy produces $28 trillion a year. Musk is claiming one product, made in one company's factories, will eventually be worth more than a third of the entire American economy. Either this is the most audacious business pivot in corporate history, or it's the most expensive miscalculation ever made. But here's the thing. That's not even the most shocking part of this story. Before we get there, you need to understand exactly what Tesla is building and why the math either works brilliantly or fails catastrophically. Because the shocking part won't make an ounce of sense without it. To understand what Tesla is becoming, you have to understand what it already built. Tesla is not primarily a car company anymore. It hasn't been for several years. Most people just haven't updated their mental model. Tesla is an AI and manufacturing company that happens to still sell cars. The cars were always the Trojan horse, the product that funded the development of the neural networks, the battery technology, the manufacturing systems, and the supply chain that Optimus now runs on. Here is what that transition actually looks like on the ground right now. Optimus Gen 3 production began at Fremont in February 2026. Hundreds of units are currently in internal testing across Tesla's facilities. Musk's stated target: 50,000 to 100,000 units in 2026, scaling to 1 million annually by 2027 and 10 million per year beyond that. The target price: $20,000 to $30,000 per robot. Current manufacturing cost: industry estimates put it between $50,000 and $100,000 per unit. That gap between what it costs to build and what Musk wants to charge is the central tension in this entire story. Tesla needs to close a $30,000 to $70,000 per unit cost gap before the business model works at all. At current costs, every robot sold loses money. If Tesla hits even 30% of its production targets and sells robots at $25,000 with software subscription margins on top, the revenue potential by 2030 reaches between $300 billion and $1 trillion annually. That is why the stock market is pricing $400 billion worth of value into robots that do not yet exist commercially. But here is the thing. Building a cheaper robot isn't the real hurdle, and it's not even the most shocking part of this story. Before we get to the massive structural secret hiding inside the manufacturing data, the one that explains why Wall Street is completely ignoring these multi-million-dollar losses, you have to understand the invisible engine making these machines smart. Because the real shocker won't make an ounce of sense without looking at the raw data pipeline first. The business case rests on one insight that most analysts underestimate. Tesla is not starting from scratch. Every neural network that allows an Optimus robot to navigate a factory floor, pick up a component, and place it precisely was trained on data collected by millions of Tesla vehicles driving billions of real-world miles. The visual perception system inside Optimus is the same architecture as Tesla's full self-driving software. The hands have 22 degrees of freedom and tactile sensing developed over years of iterative engineering. The manufacturing supply chain, the batteries, the actuators, the compute, already exists at scale inside Tesla's operations. No competitor building humanoid robots has this foundation. Boston Dynamics has better movement. Figure AI has venture backing. But none of them have a fleet of 6 million vehicles continuously generating the training data that makes the AI inside their robots smarter every single day. The moat is not the robot. The moat is the data pipeline that never stops growing. And then there is the business model hiding inside the product. Musk's vision is not to sell robots. It is to lease them at $5 to $10 per hour, cheaper than any human labor in any market on Earth, with software updates, maintenance subscriptions, and task-specific capabilities sold on top. A robot working 16 hours a day at $8 per hour generates $46,720 annually. At 1 million robots, that is $46 billion in annual recurring revenue. At 10 million robots, $460 billion. This is not a car company. This is a labor replacement platform with subscription economics. And that brings us to the actual shocker, the hidden loop nobody is talking about. Here is the part most people covering Tesla will never tell you. Musk doesn't actually need Optimus to work for consumers at all, at least not yet. Tesla has already deployed over 1,000 Optimus robots inside its own Fremont factory doing live production work. Every robot that works inside a Tesla facility costs Tesla nothing in sales commission, nothing in marketing, nothing in customer support. It generates data, reduces labor costs, and trains the AI simultaneously. Tesla is its own first customer, at scale, which means even if the consumer market takes 5 years longer than Musk promises, Tesla can deploy tens of thousands of robots internally, make them smarter on real industrial tasks, and build the track record that makes every other manufacturer on Earth want them. The consumer product is the exit. The internal deployment is the proof of concept that funds the journey there. That is the detail that changes the entire financial picture, and almost nobody is talking about it clearly. Now here is where intellectual honesty requires stopping and making the counter-argument as strongly as possible, because it is a strong counter-argument. Rodney Brooks, MIT roboticist, co-founder of iRobot, one of the most respected figures in the field, called Musk's vision of humanoid robots as universal assistants pure fantasy thinking. The specific technical problem he is pointing at is real. A robot walking 10% slower than a human creates production bottlenecks. One that cannot open a specific door handle requires facility renovation. One that struggles with an unfamiliar object shape stops the line. The promise of 10 million robots that simply drop into existing facilities assumes a world perfectly engineered for robots. The real world is not that world. Amazon spent $775 million to retrofit a single warehouse for robotic operations. Tesla is promising robots that work anywhere, in any environment, with any task configuration. The math between those two realities is off by a factor of roughly 1,000. There is also the question of timeline credibility. Musk promised 5,000 to 10,000 Optimus units in 2025. By July 2025, actual production was a few hundred, less than 1/10 of the target. The gap between Musk's stated timelines and physical reality is not a new pattern. The $400 billion the stock market has priced in for robots that don't yet work commercially. That is money investors could lose entirely if the technical challenges prove harder than the roadmap assumes. Tesla has 3 years to demonstrate that Optimus performs genuine revenue-generating work at scale. If it does, the bull case is one of the most extraordinary value creation stories in corporate history. If it doesn't, the car business alone supports a valuation roughly half of where Tesla trades today. Tesla stopped making the Model S and Model X to build robots. That is a fact, not a prediction, not a promise. A decision already made and already being executed on factory floors that used to produce the car that made Elon Musk famous. Whether that decision is visionary or catastrophic depends entirely on whether a $50,000 robot can be made for $25,000, and whether it can actually do useful work in the real world rather than controlled demonstrations. The next 18 months will answer that question more definitively than any earnings call, any analyst note, or any Musk announcement ever could. Watch the production numbers, watch the cost per unit, watch whether robots show up performing real tasks in facilities that Tesla doesn't own. Those 3 data points will tell you everything the stock price currently cannot. This is gated. Subscribe. The next door opens soon.